Peter Lynch's One Up on Wall Street book review. If you are just getting started with the stock market and want to read a book to understand the basics of investing or how the market works, then One Up on Wall Street by Peter Lynch is unmissable. One Up on Wall Street is one of the best books ever published on the stock market and an all-time bestseller. The book was originally published in 1989 by popular investor and fund manager Peter Lynch. In this video, we look into the One Up on Wall Street book review and discuss a few of the best points highlighted in the book. Keep watching. About Peter Lynch. First of all, let us introduce you to Peter Lynch if you do not already know him. Peter Lynch is an American investor and a former fund manager. He was managing the Magellan Fund at Fidelity Investments between 1977 and 1990. During this period, Peter Lynch averaged a 29.2% annual return on his investments. Moreover, what makes this more appealing is that the returns were consistently beating the market index by a factor of at least 2. During this period of 18 years, Peter Lynch's assets under management, which was originally $18 million in 1977, increased to $14 billion. Peter Lynch is one of the rare fund managers who gave fairly high return to his investors for 13 long years in a row. Later, after retiring, Peter Lynch wrote 3 popular books: Beating the Street, Learn to Earn, and One Up on Wall Street. Here are a few of our favorite quotes by Peter Lynch on investing from his books. Investing without research is like playing poker and never looking at cards. Invest in what you know. It leaves out the role of serious fundamental stock research. People buy a stock and they know nothing about it. That is gambling and it is not good. One Up on Wall Street book review. In the book One Up on Wall Street, Peter Lynch teaches how a common investor can get great returns from his investment in the stock market if they follow a few general investing principles and a common sense investing approach. Lynch believes that with a little research and steady discipline, every common person can outperform the so-called investment gurus and make consistent returns. To start with, Peter Lynch advocates the idea of invest in what you know. He suggests that many great investments could be right under the nose if the investors are ready to look into common stocks. Most people just have to look around the places where they work or the spots where they visit to grab those opportunities. A common person is exposed to many interesting local companies and products years before any professional investors could get the news. If these investors find and invest in these growing local companies, they can surely make amazing returns. Now let us understand what Peter Lynch means by invest in what you know. Now let's look at an example. Suppose you are a doctor and on the side you want to invest in some good stocks and build your portfolio and make returns. What most doctors will do is go back home, search for a banking or renewable energy stock, read a little about them and make their investment. On the other hand, assume there is another banker who works as a bank manager. He is also interested in the market and he goes home and researches a pharma stock and invests in it. What do you think will be the outcome of these investments? It is most likely that these investments will give a below average return. The doctor, who will have good knowledge of the medicines and the pharma sector, could have done a lot better if he started investing in companies within his circle of competence. He might already know some of the pharma companies who are doing exceptionally well and making amazing medicines. On the other hand, the banker should also have focused on the companies in the banking sector. With his years of experience in the banking industry and daily interaction with other co-bankers, he might already have good insights about which banks are doing well, how much profits or NPAs other banks are making, and other similar stuff. If only these investors had invested in what they know already, it would have been highly likely that both these investments would have made good returns. This is what Peter Lynch meant when he said, invest in what you know. Moreover, he focuses and highlights this as taking advantage of what you already know. Key advices by Peter Lynch in One Up on Wall Street. While looking into Peter Lynch's One Up on Wall Street book review, it is also important to discuss a few of the best concepts taught by him in the book. There are a number of great pieces of interesting advice given by Peter Lynch in One Up on Wall Street. Here are a few of the best ones. Number 1. Only invest what you could afford to lose without the loss having an effect on your daily life for the foreseeable future. Number 2. There are a few qualities that are required for a successful investor. They are patience, self-reliance, common sense, open-mindedness, tolerance to pain, detachment, persistence, humility, flexibility, willingness to do independent research, an equal willingness to admit to mistakes, and an ability to ignore general panic. Number 3. Invest in companies, not the stock market. Number 4. Ignore short-term fluctuations. Number 5. Do not try to predict the economy. A great many have tried and failed. Predicting the economy is futile. Number 6. Large profits can be made in the stock market. Larger losses can also be made in the stock market. Number 7. If you want to avoid a single stock, it would be the hottest stock in the hottest industry. Boring stocks give the best returns. Further, Peter Lynch has also described 6 types of stocks that are found in the stock market and which can help you judge and pick the stocks better. One Up on Wall Street book review, other key points. In the book One Up on Wall Street, Peter Lynch also described how to choose a stock and the things to consider before buying the stock. In the 2-minute drill section of the book, Peter Lynch describes a basic strategy that every common investor should use before purchasing any stock. This book also advocates how long to invest and when to sell in a few of its chapters. Alongside, Chapter 18, one of the best chapters in the book, narrates 12 of the silliest and most dangerous mistakes that people say and make in the stock market, which is quite interesting to read. Closing thoughts. In this video, we look into the One Up on Wall Street book review. If you see the book as a whole, One Up on Wall Street by Peter Lynch is a must-read book, especially for the stock market beginners. Peter Lynch's strategies in the book are quite simple, logical, pragmatic, and easily replicable. Newbie investors can get great benefits by reading this book. That's all for this video. We hope this video on Peter Lynch's One Up on Wall Street book review and the summary was useful to you. Do let us know what you think about the book and its review in the comment section below. We'll be happy to read your reviews and feedbacks. Have a great day and happy investing.